The mid-caps are very flat as well, up just about 50 odd points. So just consolidating around these levels.
The opening was flat, yes, but since then, we've seen the markets pick up.
Right now, 0.5% higher on the Nifty. The mid-cap index also in line with the benchmarks.
It's we're basically we're looking at three-digit gains on the Nifty. And the Bank Nifty is looking super strong. We did not go to being up 200 points higher. The market did come back a little bit. We are up 160 odd points. The day high is 18,267.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar and these are the headlines for the day. India bucks the global downtrend. The Sensex and the Nifty turned positive for the year, ending at their highest level in 4 months. India's largest mortgage lender, HDFC, beats estimates in Q4. Asset quality the best in over 4 years. Net interest margins at a 7-quarter high. They also declare an interim dividend of 44 rupees per share. Dabur falls 1.5% after reporting a decline in margins at 15.3%. Reports a miss in profits, at the profits coming in at 290 crore rupees. Revenue meets street expectations. TVS Motor surges over 1% and Hero MotoCorp gains about 0.5% on the fourth quarter results. The Nifty Auto Index ends flat. Shareholders and creditors of Reliance Industries approved the demerger of its financial services arm. The demerged unit will be listed on the stock exchanges as Jio Financial Services. Macquarie expects a 1.5 lakh crore rupee valuation, making it the 5th largest financial services company in India. And now to the market action for the day. The Lal Street turned positive for 2023 to end at over 4-month highs. The Nifty and the Sensex gained close to 1%. The Nifty closed above the 18,200 mark. The Nifty Bank rose in line with the blue chips and is now just 1% away from its record high levels. Prashant is here with the details.
Well, the handoff from Wall Street last night was not all that great. Markets were mixed. The Fed had hiked, although closer to a policy cycle high. But there was no confusion here. The market started and then it was a slow, steady, but sturdy march higher for most of the day. It only picked up steam on the upside in a sharp way in the last 40 minutes of trade. It was, of course, also the weekly expiry, so probably something to do with that. FIs and the margin have been buyers. And I think today's figure should also be interesting. Bank Nifty is now 1% away from an all-time high. That's quite something. Nifty is not very far away from its high either. Broader markets, mid-caps and small-caps, 1% gain on both those indices. Advanced decline 2:1, 2:1 plus. I mean, so look pretty good from the word go, never faltered. Gains coming through in HDFC Bank and Reliance. I mean, actually, almost all 50 Nifty stocks were in the green, but these three contributed about 50 index points. Then you had TCS, Bajaj Finance and Adani Enterprises, which did well. In the broader market, lots of results-related reactions like Chola Finance. You had M&M Finance, which did well. ABB was a results reaction. Insurance companies, New India Assurance, you had GIC RE, which did well. Graphite India, Patel Engineering, Viatech, Vabag were some of the names which participated. Rail infrastructure stocks which have been flying pulled back a little bit. RVNL, IRFC, IRCON, case in point. EIL, PSU names were all the rage yesterday, pulled back a little bit, and a few others like Petronet and Aavas Financiers as well. What to watch out for? Of course, I mean, we're not very far away from all-time highs for the Bank Nifty and, of course, for the Nifty as well. But I think we will still need to watch out for day two reaction in the US markets. Sometimes that is more meaningful than the immediate reaction on big days like the Fed day. US bank troubles, regional bank troubles will be in sharp focus, whether it gets settled or it accentuates on the downside. There is an ECB meet today where a 25 basis point hike is expected. And, of course, earnings will be closely tracked as well. And my sense is they are tracking towards more upgrades for the full year as compared to downgrades. Back to you.
Thank you very much for that. And tomorrow is going to be a big day in terms of earnings, particularly for the FMCG names. Britannia and Marico will be reporting numbers. And another important company will be Federal Bank. But let's get you some market opinion now. Sanjeev Prasad, Managing Director and Co-Head at Kotak Institutional Equities, is betting on the financial space. He also added that one needs to watch the slowdown in the United States before looking at the IT sector.
I still think it's not that late to get into the financial space. Valuations are still very, very reasonable for most of the most of the banks and NBFCs. In fact, if you look at most of the banks are trading below 2 times price to book. Most of the NBFCs, if you exclude things like Mahindra Finance or Chola, most of them are in the region of less than 1.5 times 12-month forward book. And if you look at most of the banks will now probably do about 13 to 17% ROE. Most of the NBFCs are also in that range now. So look quite okay from a valuation standpoint. IT, it's more of a, let's say, a 6 to 9 months call. We still have to see, what is the extent of slowdown in the US. As of now, the US economy is still doing very well. The US Fed has signaled for now a pause. But I think the market is probably getting it wrong in the sense that it is assuming that you will see a series of rate cuts, by the Fed starting from the September policy meeting, and very quickly, within a year's time, we'll go to about 4% policy rate. I don't think that's going to happen.
Let's get to the big global story then. Stock markets around the world were subdued after the U.S. Federal Reserve hiked interest rates by 25 basis points. The Fed also signaled that it could potentially hit the pause button at the next policy meeting in June. The federal funds rate in the United States is now above 5%, the highest level since August of 2007. Here is the U.S. Federal Reserve Chair Jerome Powell hinting at a potential pause in rate hikes and the high inflation.
Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. Inflation remains too high, and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
That's the global update. Now let's get to the second headline for the day. Now, HDFC reported their Q4 numbers, and it's a strong showing. Net profits ahead of street expectations at 4,400 crore rupees. The net interest income, the NII, also coming in strong at more than 5,300 crore rupees, and plus there is an interim dividend of 44 rupees per share. The stock surge posts the numbers. There you have the reaction, ending with a gain of 2.5%. Abhishek joins in with the key highlights. Abhishek.
Well, it was a strong operational performance coming in from HDFC Limited, with its gross NPA ratio being the lowest in last 18 quarters and the net interest margin being the best in last 7 quarters. So the gross NPA ratio has declined to 1.18% when compared to 1.49% in the previous quarter. This was led by the fact that the non-individual gross NPA declined by almost 100 basis points to 2.9% when compared to 3.9% in the previous quarter. The net interest margin was a 7-quarter high at about 3.6% when compared to 3.5% in the previous quarter. The spreads have remained stable on a sequential basis, that is quarter on quarter, at 2.29%. The AM growth was on the lower side, coming in at 10.7% YOY and about 3.2% sequentially. The growth in the loan book was impacted by the non-individual portfolio, which declined by 11.55% on a YOY basis and about 4% on a sequential basis. So in terms of their performance in PNL versus our poll, both the ANA and PAT were a beat on our poll. Back to you.
Thank you for that. And now here is the third headline for the day. Dabur tumbled 1.5% on the back of a weak set of Q4 numbers. The FMCG major's net profit missed street expectations. The net profits came in at 290 crore rupees. Expectations were for 350 crores. The big problem is the margins. Margins, or the EBITDA, declined by 9% on a year-on-year basis. 15.3% is the EBITDA number versus estimates of close to about 16%, and much lower than what they had clocked in the year ago, 18%. Mangalam is here with the key numbers. Mangalam.
Well, what led to the profit miss in Dabur this time around was the EBITDA. The EBITDA margins for the company have come in at 15.3%. The street was bracing itself for a 200 to 250 basis points margin decline, as the company had indicated in its quarterly update. But this time around, the margin decline has been around 270 basis points. And that has led to a further decline in the net profit as well. So the net profit is below our estimates on account of that. As far as the volumes are concerned, no problems. It's 1%, much in the range of what the street was anticipating. But the company's commentary here is largely because, the volumes were 1% because consumer downtrading and to affordable packs and low unit packs on account of price sensitivity meant that they bought a 300-gram pack as against a 500-gram pack, and that's why the volumes are just about 1% higher. If you just take a look at the other details of the company as well, they've seen oral care growth to be about 15.8% in terms of market share. Hair oils business also reported a market share at 130 basis points, and the market share of the company in its air freshener category increased by 140 basis points. But the international business saw a big decline in their margins. That's translational largely because of despite a 90% growth in Turkey revenues, the currency depreciation meant that there was a further decline in the EBITDA margins as well. So a large part of the EBITDA margin decline can be attributed to translation losses in their foreign business as well. The company has recommended a dividend of almost 2.7 rupees per share. Does not account for too much in their overall scheme of things, but the margin miss is something that the street does not like.
Thank you for that. Let's take a look at the other important earnings from today. Chola Investment rallied 7% after reporting a robust Q4. The company reported an all-round beat with the best loan growth in more than 27 quarters. It's the highest ever quarterly profits for the company. Asset quality has also improved, the non-performing assets coming in at an 8-quarter low. Abhishek is back with us with the key highlights.
While Chola reported a strong set of numbers, it was a record quarter on many parameters for the company. So YOY, the loan growth was the best in last 27 quarters, coming in at 36%, which was driven by the disbursal growth of 20% on a sequential basis. Asset quality, one of the best in last 8 quarters, both the gross NP ratio and the net NP ratio coming in at 4.6% and 3.1% are the lowest in last 8 quarters. So highest ever operating profits that you are seeing on a quarterly basis coming in at 1,276 crores. New business momentum has remained robust, which is on the SME front that they are focusing on. So that was pretty strong over there. Cost to income ratio is the lowest in last 5 quarters, coming in at 39.2%. In terms of the P&L performance, both the NI and PAT is a beat on our poll. Brokerages do remain bullish. The only worry for them is that they would want the promoter dispute to be resolved for a further re-rating on the stock. So across brokerages like Macquarie, CLSA, Morgan Stanley and JP Morgan, they remain bullish on the stock. JP Morgan has in fact double upgraded the rating on the stock to overweight from underweight and increased the target price to 1,020 from 700 that they had earlier. Back to you.
Thank you very much. And let's also listen in to Arul Selvan Dinesh, the President and the Chief Financial Officer at Chola Investment, who says that the company needs to work on this year's growth. Listen in.
AUM growth should be, in the range of around 20%, 20-25%. I would put it there because the base is larger now, and which we need to work on this year's growth. The new businesses over period will be in the range of around 15% share of the overall AUM. This is again the similar numbers which we spoke earlier. Vehicle finance, where we have a fixed rate book, there you would have seen that the NIMs have come down, whereas in the LAP and the HL and the other products, you would have seen the rates improve, primarily because these products had been repriced with regard to their existing book also. But in the mix of the vehicle finance, as we move on with newer disbursements happening at higher rates, these spreads would improve.
Another big mover today is ABB, soared 5% after it delivered very strong numbers in Q1 of calendar year 2023, beating estimates on all counts on the back of strong order inflows. Vivek is here with the details.
Capital goods major ABB India delivered its results, and it was an extremely strong set of results that managed to surpass all of the analyst estimates. In fact, a couple of days ago, ABB Global had also declared its Q1 CY23 results, and in that particular results press release, ABB Global had indicated that the order inflow for its Indian arm and its Indian entity was extremely robust, which was reflected in the results. Talking about the results themselves, revenues jumped up by over 22.5% on a year-on-year basis, much above consensus estimates. When you're talking about the EBITDA was higher by over 52%, coming in at the 285 crore mark, once again handsomely beating analyst estimates. When you're talking about the margins expanded over 250 basis points. Net profits were down, however, optically lower on the back of the fact that the base quarter actually had an exceptional gain of 293 crore, indicating again that the profitability had grown on a year-on-year basis. The key highlights of the quarter, and this is what analysts have highlighted quite significantly, is the fact that the order inflow has been extremely robust. In fact, it's the highest ever order inflow that the company has witnessed. The order inflow has come in at over 3,125 crore, up 37% on a year-on-year basis. And the orders have come in from most of the segment, which is metals, data centers, as well as IT majors. Order book too extremely robust at 7,170 crore. Nomura came out with a report, Nomura saying that Q1 CY23 handsomely beat consensus estimates, led by significantly higher than estimated profitability of the electrification segment. They've also noted that at this point of time, the valuations ascribed to ABB are quite rich. The company is currently trading at 66 times one-year forward PE earnings.
Thank you for that. And finally, let's talk about Petronet LNG, because it wasn't all good on the Lal Street. There were a few misses, and the one which stands out is Petronet LNG. A weak set of Q4 numbers. Came out with numbers yesterday post-market hours, a miss on all parameters, big decline seen in margins. Revenues have fallen by 7% on a year-on-year basis, and the stock slumped 4%. Sonal is here with the details.
Well, it was a top-down miss for Petronet LNG this time around. It was expected to be a good quarter because of lower spot LNG prices, but the revenues declined 12%, lower than the poll as well at 13,874 crore rupees. EBITDA also lower than the poll at 940 crore rupees, and margins at 6.7%. It's a 200 basis points number lower than what the street was working with. Profits have come in lower as well at 614 crore rupees. Number of reasons for this fall. One, the volumes were lower than what was expected, and utilizations too. So for the H terminal, the volumes were up 11% versus an expectation of 14% increase. The utilization, yes, that increased on a quarter-on-quarter basis, but still lower than what the street was working with. Kochi volumes were flat. Utilization came in at 8%. In fact, the FY23 financial performance of the company is the lowest that they've seen in last 4 years. That's a weak performance that the company has reported. Jeffrey says that yes, the H utilization has improved by 297% in the month of April, but still it remains a concern. The lack of surprises on capex was comforting. However, they still have to put out a capital allocation policy, which has been a big concern for the investors. And finalization of the PDHPP project could be a key overhang on the stock as well. Motilal Oswal says, yes, volumes have improved now since spot LNG prices are lower, but despite near-term improvement, long-term volume growth prospects remain bleak for the company, and intensifying competition coming in from new LNG terminals and increasing domestic gas production is something which could put pressure on future volumes as well, and that's why they have a neutral rating on the stock.
Thank you for that. Let's get to a few global earnings then. British oil major Shell beats analyst expectations, posts record March quarter profits of $9.6 billion. The company said robust operational performance and lower costs to run its day-to-day business reflected in their better-than-expected earnings. European automaker Volkswagen has beat street estimates in Q1. A rise in sales across US and Europe helped offset the slowdown in China. Volkswagen has sold nearly 2 million vehicles in Western Europe alone. Its operating profit declined but remained above $6 billion. And Belgian brewing giant AB InBev's March quarter profit beat analyst expectations. Profits rose 14% on a quarterly basis to $4.7 billion as customers continued to buy its products despite higher prices. Revenues were up 13% on a year-on-year basis to $14.2 billion, in line with market estimates. Get into a break, but stay tuned. We'll be back in a jiffy with the other headlines. Welcome back. You're watching Markets Today, and this is the fourth headline for the day. TVS Motors and Hero MotoCorp rallied about 0.5 to 1% ahead of their Q4 numbers. The street is expecting a good set of earnings. Sonia joins in with the expectations. Sonia.
Well, thanks a lot for that. As you rightly pointed out, the numbers coming in from Hero MotoCorp and TVS Motor today. Now, for Hero, it's expected to be a decent showing this time around because there was a recovery that we saw in demand. So the volume growth will be about 7% on a year-on-year basis, coming in at 12.7 lakh units. Now, there was a healthy recovery both in urban and rural demand this time around. There was traction during Navratri, so the festive season also aided the numbers. And there was channel filling ahead of the BS6 norms that come through. So because of all of that, the volume growth has been about 7%. However, the revenue growth will be better because the companies have undertaken a price hike as well. So 11% revenue growth is what we're looking at, a profit growth of 20%. For TVS Motor, now the story could be a bit different because exports have dragged down the overall numbers for TVS Motor. So although the volume growth has slowed down significantly to 1.4%, that will actually be dragged by a 14% downtick in export volumes. However, the revenue number will still be in double digits because realizations have improved on account of the price hikes that the company has undertaken. But it's two different stories. For Hero Motor, rural demand has picked up, while for TVS Motor, exports have dragged. So we await management commentary on both these numbers. Back to you.
Thank you for that. Let's get to the fifth headline there. Reliance rallied close to about 1% after shareholders and creditors of the company approved the demerger of the financial services arm. The demerged unit will be listed on the stock exchanges as Jio Financial Services. Sonia is back with us and she's going to tell us about the demerger plan and what brokerages make of this move by Reliance.
Well, thanks a lot for that. So Reliance shareholders and creditors have passed a resolution for demerger of the financial services arm. The eventual goal is to list the company Jio Financial Services on the BSE as well as NSE. If you remember, last year in October of 2022, the Reliance board had approved the demerger of Jio Financial Services. KV Kamath will be the non-executive chairman of the company, and Reliance shareholders will receive one share for the demerged entity for every share of the parent company that they own. Now, Jefferies expects the listing of Jio Financial Services to happen in September. This is a big positive for shareholders because it is unlocking value by the company. Macquarie has pegged the value of the company at 1.52 lakh crores and says that Jio Financial Services post-listing will become the fifth largest financial services firm in India.
Thank you for that. And another big corporate story. The National Company Law Tribunal, NCLT, has reserved its order on a plea filed by cash-strapped airline GoFirst. The airline has filed for bankruptcy and is seeking protection under an interim moratorium. Meanwhile, GoFirst also cancelled all flights till the 9th of May. Aviation regulator DGCA has ordered a full refund to all passengers. The CEO of GoFirst spoke to CNBC-TV18 yesterday and said bookings have been suspended from the 6th to the 15th of May. Ashmit is here with more on the court action. Ashmit.
Indeed, the argument stretched across nearly 4 hours. The contention that is being put forth by GoAir is that, look, the entire idea of the IBC is to preserve the company in question, to make sure that it is maintained as a going concern. And with that in mind, they have sought the protection of an interim moratorium. What they're essentially arguing is that if this moratorium is not allowed, then the lessors will have a free hand in taking possession back of the aircraft, which would leave nothing for the airline. They, in fact, at one point also cited the example of Jet, which at the time of going into insolvency had over 100 aircraft. But by the time the resolution applicant came into the picture, it had come down to as low as 11. So that's the rationale, that's the example that GoAir gave in trying to seek some relief from the NCLT. The NCLT on its part had some pointed questions to ask. Number one, the NCLT asked that whether or not there is any power available under the IBC to allow for such an interim moratorium. The second question they asked is that as far as the aircraft themselves are concerned, if there are issues of maintenance and supply of engines, then there's a very real concern that the balanced 26 aircraft could also be grounded, and therefore the question arises, is there a need for a moratorium? Another question that was posed by the NCLT is that the company has been professionally run. What addition can an IRP make to the running of the company that the current promoter and the current management could not make? So these were some pointed questions. Now, what is also important at this point to understand is that the lessors, as representing as many as 26 aircraft, were here before. They're objecting to GoAir's application. They're saying that this is a malicious litigation, and they're objecting to grant of any relief, claiming that they have contractual rights to terminate the lease agreement and to take the aircraft back. So on all of these questions, we understand the orders have been reserved, and the NCLT will have the final word on how to proceed, whether or not to allow this interim moratorium or to have the lessors with a free hand to take back the aircraft.
Thank you for that. Let's now take stock of the commodity space. Crude oil prices saw some recovery. Remember, there was a sharp 3-day plunge. Prices were down 9%, but today there are some gains. The gains, though, are limited as jitters over demand overshadowed signals of a rate hike pause by the Federal Reserve. Brent crude prices are currently hovering around $73 per barrel. And gold prices hit an all-time high level. The upward momentum for the yellow metal continues. Weakness in the US dollar, safe haven buying have pushed global prices now to nearly $2,100 per ounce. In India, the prices are 61,400 rupees for 10 gram. Gold futures are also trading at a 4-month high. Getting very expensive there. But with that, we are out of time on Markets Today. Thank you for watching.